September 2nd, 2025, and what do we get? A move expansion day. We've been talking about it, and it finally is here. It arrived, and for those of you that took action when action was required to be taken, which was Friday, which was Sunday night, okay, you guys are up. Huge congratulations on gold calls. Gold is up almost like 100 points since Friday. And I think this is just the beginning of the rally. Wouldn't be shocking to see gold way higher by the end of this week and next. But if you missed on gold, okay, what should be on your radar right now, not only all the information you should review that I described in great detail in the last few podcasts, but more importantly, is like, okay, what is the next thing that's going to make the big move? And I want to talk to you about bonds, guys, okay, bonds, and how to trade bonds. And the reason is so critical this week is because every day you get an economic data that deals with what? Job data. So tomorrow you got JOLTS numbers, which deals with the job openings, which gives you a sort of a measurement of, you know, how excited employers are about giving someone a job. And clearly, I mean, that number could be way off from what the market expects. And ADP report, which is a private job report measurement, is on Thursday, and the Big Daddy report on all type of job measurements is on Friday. So 3 days back-to-back of job measurements, and it is the jobs that the Federal Reserve is focused on. So therefore, based off what Powell said, that's the data that they're going to be looking at. The JOLTS report tomorrow, the ADP report Thursday, and the Big Data report Friday. Basically, guys, there's an overwhelming probability that as a result, bond market would get within millimeters from April lows. Now, I've mentioned it on a few podcasts before, but you know, today the market is just focused on garbage. And I'm telling you, the move that's been taken to the downside, and by the way, guys, I mean, those 64.25 strike puts we were buying on Sunday night, they went anywhere from 10 to 15x, depending on your exact entry and fill price that you got on your S&P 500 puts. So not a bad trade, but what I'm about to tell you could produce way greater trades than 10, 15x. So here's the basic outlay of the trade, okay? I want you to pull up the charts, go to stock charts and pull up a few things so you have a good reference point, okay? I want you to pull up a time frame on either 6 months or 9 months, and I want you to pull up a couple of things. Number one, pull up TLT. TLT is a long-term bond. TLT basically is comprised of 20 and 30-year bonds. And we're talking about the current jobs data. It has a direct impact on the Federal Reserve decision about rates. And that decision has a direct impact on the direction of where TLT is going to go. Now, I mentioned earlier on a few podcasts that bonds, or the long-term bonds, was the biggest concern for everyone in April. See, it was all masqueraded. Oh, it's the tariffs, it's blah, blah, it's all this, you know, all the garbage you hear in the news. Okay, but the reality was all about the bond market. And, you know, they came in, they locked Trump in the room, and they told him, look, man, if you don't save the fucking bond market, you're fucked. And he said, oh, well, I didn't know it works like that. Fuck. I guess we got to save the fucking bond market. So he made a deal with the Fed. Now, it's nowhere in the news, guys. I'm just telling you behind the fucking scenes what happened in April. So all of a sudden, Federal Reserve, a balance sheet jumps because they're buying fucking bonds. So the Federal Reserve, under the radar, rescued the bond market in April. The number one reason to dump bonds is higher inflation. There's not, like, nobody wants to hold fucking U.S. government bonds under these two conditions. Number one, U.S. dollar is declining. So, for example, if you're a foreign investor and you're buying U.S. government bonds, okay, you're taking a hit, okay? I mean, United States government bonds, okay, they only pay a few percentage points, right? So if dollar conversion in relation to that currency, foreign currency that they transact in, but then they convert it and they're taking a huge hit. I mean, the dollar could be down by as much as 10% this month. So that tells you that there is a huge catalyst for people dumping bonds, because there's no way they're going to make money on U.S. government bonds simply because of the conversion ratio that's about to take place. Number two, okay, nobody in their right fucking mind wants to hold bonds in the case of escalating inflation. Okay, so escalating inflation means, okay, give or take inflation now, the bullshit fake inflation that they're reporting is at 3%. It's probably like 10%. So if you're holding U.S. government bonds that pay you 3 or 4%, but the inflation is about to go from 3 to 3.5 to 4 to 4.5 to 5, that means you're taking a big hit, okay? You're losing fucking money on holding U.S. government debt, okay? So basically, you got two major catalysts: dollar lower, inflation higher. That's that is the, I mean, you cannot come up with a more bearish case for fucking U.S. government bonds. And the reason Trump jumped off the fucking cliff that day and said, okay, I'll stop my tariff bullshit garbage in April, I'll make an extension, I'll do that, because he finally saw that if bond market collapses, okay, his favorite index, which is Dow Jones, that's how the guy looks at the fucking financial markets. Oh, the Dow Jones is up. That's 30 stocks. Who gives a fuck about that? Okay, but the point is, if bond market, okay, I'm going to give you specifics, okay? Where would bond market have to collapse in order for the whole market to fucking tank like you haven't seen? It's not like the point of by how much that you got to look at, but by how much within a specific time frame. So it's not that the market has never dropped 10, 15, or 20%. It's just you got to put the size of the drop in relation to the time frame. That's what you got to be looking at. This is the way you got to be looking at the markets if you're trading options. Okay, what is the size of the move? What is the size of the move, and within which time frame? Because when dealing with trading options, you always have to answer a question. Okay, by which time this move is going to take place? So I had a new trader. He was trying to buy gold calls, but monthly expiration. I said, dude, by the time you pay the premium, you're not going to make any fucking money. I said, sell your monthly gold calls and buy weekly gold calls. So, I mean, he's up 80K on gold calls today, but if he would have just stayed with the monthly, he would have been up, okay, 15K. That's a big difference, That's a big difference. Same trade, same everything, but you change the expiration, and all of a sudden there's 65,000 worth of profits. Now, it's not a big deal if you got a $10 million trading account, but it is a big deal if you got, a 50K trading account, because that means in just one fucking trade, by choosing the proper expiration, you have just more than doubled your account in one trading session, which most of the traders, guys, I'm telling you, I work with a lot of fucking traders. Most of the traders, they can't double their fucking account in a year or fucking 5 years, okay? So think of how critical your selection of expiration and strike really is. And that's what a 30 Market Moves coach really helps you out with. It's stuff like that. It's those little nuances that make a huge difference. So I have other traders that are like, they're all, my phone is blowing up because, everybody's seeing, oh my God, well, the market is fucking dropping big. But when should my phone have been blown up is, Thursday, Friday, when we were at all-time highs, and I was recording podcasts about how the move expansion is about to take place. I mean, that's the time. You don't get in touch with me after S&P just made a move expansion of 90 points. By the way, guys, congrats. That was a really nice trade. But the point is, what do you need to focus on in the market right now to catch the next, gold type trade? And I'm telling you, you should keep all your focus on the bond market. And I'm going to give you the specifics now. So the bonds, if you're trading options on futures, which you should be fucking doing, you shouldn't be trading TLT. You should have your account set up properly for trading futures on options on futures. The main difference is, if you trade options on futures, you're able to enter, exit your positions 23 hours a day. The only time these things close for trading is between 5 and 6 p.m. Eastern time. So they're not 24 hours, but they're 23 hours a day. So most of your economic reports, they come out at 8:30 in the morning, 8:15, 7:30, 8:45. Very few come out after market open, but they do, like 10 a.m. and so on. But majority of the reports are going to be before market open. So if you are not trading the proper instruments, okay, so for example, somebody saw the market, dropping Sunday night, but guess what? They couldn't do shit because, their account was not set up to trade. So they ended up taking SPY puts today. Well, that was the worst fucking trade, to take SPY puts when S&P 500 is down 80 points. No, you don't want to take that trade. You missed the entire fucking trade. So that's the whole, guys, set up your account for success. Make sure you're able to trade options on futures, which allows you to enter trades on Sunday night, which allows you to enter trades on a holiday like Labor Day weekend, while everybody else is asleep. You're printing money that most of the traders will never see fucking in the next year. I mean, that's what some of our traders did in the last 2 trading sessions. But the point is very simple. You want to focus on the move that is not priced in yet. And as far as bonds concerned, that should be all of your focus. All the noise that you hear in the news, okay, how it's about tariffs, it's about the court ruling, it's about blah, blah, blah crap. The market is not moving today in a big way because of any of that shit. It's the bonds. The bonds are fucking dropping again. And if they drop, the bonds right now, the ticker for bonds futures is /ZB, or just type in ZB, depending on which platform you're in, which broker you have. You should pull up futures on ZB, which is an equivalent of TLT, but on futures. So if you pull that up, then you're going to see that bonds are trading at 113.2 right now. And if they drop below 111, right? This is how fucking wild this is. If bonds drop below 111, all hell is going to break loose. Okay? And sure, fucking Trump is going to go out there and make some announcements to save the fucking market. I mean, I'm telling you, situation is dire. And you think some fucking tariffs crap is tanking the market, or it's got nothing to do with that. Nothing. It's all about the bond market. Because if United States loses the bond market, I'm telling you, all hell breaks loose. So, and it seems like such a small move, but it's, look in April. I told you earlier to pull up TLT just to get a reference point of where bonds were in April. And you can see that we're not very far from that moment in time where the long-term bond is super close to April lows, which means stock market has bounced, technology stocks bounced, Bitcoin bounced, everything bounced, but the bond market has maintained an overwhelming amount of pressure upon itself. And now the bond market fears are returning. So how do you fucking trade it? I mean, if you listen to this message this far, I mean, you probably are going to make a shitload of money, okay? Because I'm about to tell you how the fuck to trade it. So the point is simple. You go back to April, and you see the correlation. You want to pull up the charts for April for S&P 500, NASDAQ, Russell 2000, oil, bonds. You want to pull up all them charts, which, by the way, if you're new, I'll just give you those stickers, okay? So go to stockcharts.com, pull up nine-month time frame, use candle volume for your candle on the charts, and then basically type in $ SPX, that's for S&P 500, $ COMPQ, that's for NASDAQ. Just pull those up and see what they were doing in the month of April and the size of the moves they were making. Then pull up TLT and see the type of move it was making. Then pull up $WTIC, which is the ticker on stock charts for oil. Pull that up. Also, go ahead and pull up Bitcoin chart, which is $BTC USD, and put things in perspective. Also, you can pull up $ETH USD, which is the ticker for on stock charts for Ethereum, and look at what was happening in April, because this is the most recent historic precedence that we actually have of what the market does when everyone is fearful of what's going to take place in the bond market. Now, with the only exception this time around that we're not talking just about fear itself, but we're actually looking at a high probability outcome of bonds going below the level in April. So remember what I told you so far in this podcast. Inflation, what does that mean? Inflation means bonds go fucking lower. Okay. If Federal Reserve cuts rates, what happens to inflation? Inflation goes to the fucking moon. What happens to the bonds? They drop. If bonds just drop 2 more points, okay, from 113.2 to 111, if bonds drop, technically it's not 2 points, but just a little over, or pretty close to 3 points. Just remember this: if bonds fucking drop below 111. Okay, or on TLT, if bonds drop below 83, it's fucking over. It's over like you've never seen in your fucking lifetime. Okay, what does that mean? That means that S&P 500 can drop by as much as 20% within 3 trading sessions. If bonds drop below 111, if on ZB. If TLT drops below 83, we're about to see some wild fucking moves. While what? The entire Wall Street is positioned, rate cuts are so good for the market. Yeah, but they're also so good for inflation, which also means they're so fucking bad for the bond market. And the bond market is the only reason Trump fucking stopped with all his agenda in April and reversed, the course of the market in a secret decision. He knew he already made a deal with the Fed. That's why that day, April 7th or 8th, he came out early in the morning. He said, hey, it's time to buy the dip. You know what that means? He already made the fucking deal with the Fed that the Fed was going to save the bond market that fucking day. And that's when he had a big-ass out-of-the-world candle to the upside in the markets. Otherwise, shit would have gotten bad. I mean bad. I mean the whole thing would have been collapsing, because if bonds collapse, that means fucking banks collapse. Who remembers the SVB bank and why did that shit collapse? Guys, I mean, I don't have time to cover this in the podcast, but we're talking about ZB dropping below 111, okay, will keep the entire market hostage. People will be unwinding their positions on S&P, on NASDAQ, on oil, because look, what was happening in April. I'm going to give you the easiest motherfucking trade ever in the entire fucking world, and hopefully you got your account set up properly to take advantage of this. So you've got bonds dropping in April by a magnitude of 1-2% a day. Well, guess what has a positive correlation with the bond market. It's oil. Okay? Oil fucking tanks. But the big difference is for every 1-2 percentage points in the bond market, oil drops 4-5%. Okay? So when you revise that correlation, which we had between the bond market and oil, okay, I'm here to tell you that oil can drop by as much as 20% by Monday. By Wednesday, that means oil can drop to 56, which was the low in April, and oil is trading almost at 66 right now. That is, like, for those of you that understand trading oil, that move, okay, can make you millions. A move from 66 to 56 in oil within 6-7 trading days can make you millions of fucking dollars if you understand what the fuck to do with this information. And if you don't, okay, that's why you come to 30 Market Moves and you trade with a coach, damn it. So, guys, I'm just giving you like a few clues, a few ideas, but go study the historic correlations, okay? There's never been a precedence between bond market and Bitcoin, and most of the people will tell you, whoa, hold on, bond market dropping, that's great for fucking Bitcoin. Yeah, but go look at the fucking charts, okay? That's statistical evidence that when bond market was dropping, so was Bitcoin. And yet the whole world, what are they doing today? They're buying Bitcoin dip. They're telling you Bitcoin's going to go to the fucking moon. I'm telling you that Bitcoin's got a high probability of reversion way the fuck lower if we're going to see bonds under 111. All screws going to get loose, and you're about to see the fucking moves like you haven't seen those kind of fucking daily moves since COVID. Like when, circuit breakers are involved, when they're pausing the market, because the move to the downside is accelerating so badly and it's hitting the limits. So, exciting trading times, but if you do want to make sense out of this market, you shouldn't be focusing on buying the dip. What you should be focusing on and going back to March, April and studying the correlations among the ticker symbols I have just given you guys. If you have any detailed questions about this, get in touch with us. You know how to do it. Go look us up. Website. I don't know if we still have one or not, guys. I'm too busy trading with a bunch of guys, and I'm telling you guys, if you're serious about trading, next 4 months is your ticket. Is your ticket to anything you ever wanted to do in your life. You should be getting in touch with us now. If you traded with a coach before, you should be getting in touch with your coach ASAP tonight, okay, before the grand collapse, before the Black Friday, before the Black Monday, before the Black Tuesday. Let's fucking go, guys. Exciting trading times. I wish every one of you would hit 1, 2, 3, 4, 5, 10 mil plus. But I'm telling you now, in my experience of trading with a variety of different traders, it takes discipline. It takes exactly following fucking instructions and directions on exactly what to do, when to pull the trigger, when to enter, when to exit, what strikes. Guys, if you're willing to follow the program, I can fucking help you get there. So don't waste any time. All right, do something that you have never ever done in your life before. Set some fucking trading records. Let's go.